Hello everyone, good morning and welcome to today's session. So today what we are going to do, we are going to start new chapter, that is chapter number 17, due diligence, investigation and forensic accounting. Before we proceed, any doubt with respect to any of the previous chapter or previous discussions that we have? Any doubt with respect to any of the previous sessions? Any doubt, guys? So if you have any doubt, then we can discuss that doubt and then can start the new chapter. Any doubt? Good morning, Tanisha. Good morning, Mancha. Good morning, Namrata. Okay. If no doubt, then let's proceed to particular this chapter. Okay. Due diligence, investigation, and forensic accounting. Now, the first question is why we are learning this particular chapter. Okay. What is the reason of having this chapter? What is the background of having this chapter? Okay. So, guys, it's due when it comes to the due diligence, when it comes to the investigation or forensic accounting, it, it is the core area like audit for the charter accountants. Again, it's a core area like audit for the charter accountants. So, in due diligence, investigations, and forensic accounting, charter accountants play an important role. Not only that, when we will see with respect to the due diligence, and investigation with respect to the sections of the Companies Act, then we will see forensic accounting standards, okay, investigation standards. So we will see, different areas with respect to, how charter accountant play an important role in these all three categories. Okay, that's why after becoming a CA, you might get an assignment for the due diligence, investigation, or a forensic accounting. And as a result, it is imperative for you to learn and to understand what is the difference between all the three and to get an overview understanding of these topics. Okay. Before I start the discussion on each of the topic, I want a quick difference between all the three from you guys. What do you understand by due diligence? What do you understand by investigation? And what do you understand by the forensic audit? So you tell me what do you understand by all these three terms? Come on, guys. You provide me what comes in your mind when you hear the term due diligence or investigation or forensic accounting. Come on. Okay, Tushar. Good. Come on, guys. Okay. Good, Namrata. Due diligence is limited in scope. Investigation is fact-finding mechanism. Okay. Tushar, due diligence is kind of governance. Investigation is kind of inspecting particular thing, and forensic accounting is kind of checking compliance. Okay. What else? Due diligence is micro level audit or review for a specific matter or transaction. Due diligence means evaluation of decisions, including examination of records. Okay, good, good, Suresh, good, Mancha. Come on, guys. What else? What do you understand by due diligence, investigation, and forensic accounting? Whatever comes to your mind, whatever. I don't want definition, but whatever comes to your mind for due diligence, investigation, and forensic accounting, you provided. Okay, good, Tanisha. Due diligence is the exercise of the knowledge gained from the preparation before taking any decision. Audited and independent examination of books of account related to the materials. And investigation is a critical examination of any matters or books of accounts. Okay. Forensic audit to find fraud in accounting. Okay, good. But here we use the term forensic accounting, not audit. Forensic accounting means examination of suspected fraud or ascertaining committed fraud. Yes, okay, very good. So you all are correct. Okay, to some extent, you all are correct. Now I'll explain what is due diligence, what is investigation, and what is forensic accounting. Now, due diligence is an in-depth, thorough analysis of a subject matter. Okay, so basically, due diligence is performed. Now, if you see the term itself, you say due diligence means you provide, due particular respect, importance to that particular subject matter. Okay, and you are diligently checking what is the, actual nature or actual any item behind that particular, subject matter. For example, when I use the term due diligence, it is used to evaluate a business opportunity, verify agreements. For example, if there is going to be a merger, okay. So before merger, team will appoint due diligence team. Sorry, client will appoint a due diligence team in order to investigate, in order to check whether the merger should be done or not. For example, okay, from a legal side, okay, whether this merger can be performed from a legal side or not. Or let's say, from example, a commercial side. Let's say there is a company, okay, XYZ company. Now that XYZ company says, okay, I'll explain you with an example. Let's say if there is a company, XYZ Limited. Now this company is a car manufacturing company. Let's say car manufacturing. Now this company says that it has 12% market share in car manufacturing, in car sale. Okay, 12% market share. Whereas there is another company, DEF Limited. This is also car manufacturing. Okay, but the difference is this is into luxury segment. And it has, in luxury segment, it has 70% market share. Okay. Now this company wants to acquire this company. Okay. This car manufacturing company which manufactures hatchback. Okay. Now DEF want to acquire XYZ. Now, before acquiring, what DEF will do is DEF will appoint a team or someone for due diligence to verify market share. Number one, they will verify this market share. Whether an actual 12% market share is, held by XYZ Limited. Number two, they can appoint. Now, these are the examples. They can appoint for due diligence to verify undisclosed liabilities, means liabilities that the company has but has never disclosed. Due diligence to verify, financial matters. For example, uh, cash flow. Okay, then creditors. So all these areas, different areas of the financial statement can be assigned for a due diligence purpose. Okay, loans, guarantees given by company, etc. Then, again, for due diligence, it can be IT system, like how strong IT systems are, what IT systems are being used, okay, whether they can be, migrated from one to another. Then legal due diligence with respect to laws and regulations that are applicable. So, which laws are applicable to the company, whether the company is complying with those laws and regulations. Then it comes to environmental, whether company has a manufacturing plant. If yes, then whether the company is, complying with the environmental laws or not. Is there any previous penalty upon the company? A lot of things with respect to environmental. Then comes to the personal, very important due diligence. For example, how many, what is the number of employees the company has, where they are situated, whether they are working from home or working from office. Are they, sometimes their productive analysis is also done. For example, in a company, on a given scenario, how many are, how many employees are there who are performing beyond expectations, and how many employees are performing below expectations. So such kind of analysis was also done to identify, you can say, high efficiency or high working employees kind of thing. So these are just some examples where a due diligence can be performed. Okay. So due diligence is kind of a scenario where, a lot of data is taken from a particular company for, for kind of an investigation, but there is a reason behind the investigation. Okay. Now, in case of a due diligence, understand, a case of a due diligence, uh, you know, there is a almost in every case, there is a potential of a transaction or an investment like acquisition, merger, demerger. Okay, so that is the thing that brings due diligence into the picture. Okay, now again, this involves in-depth analysis, which is more in detail than the audit. This is more detailed than audit. Any doubt with respect to due diligence understanding as of now? Just I'm explaining the term. Any doubt with respect to understanding the term? Any doubt? I'm just explaining the term, nothing else as of now. investigate and evaluate business opportunity, verify agreements, encumbrance on the asset, okay, their titleship, ownership, IP, health, safety, environmental laws, etc. So these are the areas where due diligence can be performed, okay, based on the given scenario, like whatever transaction it is, based on the given scenario. In these areas, a due diligence can be performed. Now, due diligence again is a process of investigation. It's not different from investigation, it's a process of investigation performed by investors into the detail of a potential investment, such as examination of operations, management, verifications of material and facts. So again, as I said, it is performed on the on the request of the investors who is going to invest in another company. Not CXOs, but there are other teams who conduct due diligence. So there might be a separate team in an organization. They might hire a third person who will conduct due diligence in a in a given scenario. Yes, even in big loans also due diligence is done, is kind of investing. So bank is also providing good amount of a loan to a particular company. So before they provide, they conduct a due diligence if required. Now, given in this scenario, is there any definition for the due diligence? Specific definition? Answer is no. There is no specific definition of a due diligence as of today. Due diligence is kindly is majorly covered or majorly based on different kind of transactions. For example, the the due diligence will totally depend upon why it is being conducted, or on account of which transaction. For example, which merger, what they want to check in that merger, or what are the details they want to verify before the merger happens. Okay, so for those things due diligence is conducted. Okay, so what kind of transaction is happening, what kind of merger is happening, based on that the due diligence happens. And the type of due diligence. So as of today, there is no specific definition available. I would say there is no specific law or regulation which governs the due diligence. Any doubt? Any doubt, guys? Okay. Now, as I told you, why due diligence is covered. Now, again, the type of due diligence, and as I just explained you various type of due diligence. So it can be commercial due diligence or operational due diligence to verify, commercial or strategic or operational perspective of the company. For example, in this case, if I verify 12% market share, if I verify what plant, what equipments the company is using, how is the, plant and equipment life of a company. So for example, let's say XYZ Limited has rupees 200 crores as fixed asset. Okay. Or you can say plant machinery and equipment, PPE, property, plant and equipment. Now, the another company, that is DEF Limited, wants to verify the PPE, PPE's condition with respect to, okay, their usage, need for change, their health. Okay. Then cost of replacement or replacement cost. Okay. Or you can say then physical presence, etc. Also, one more thing that is very important, that is every time checked, is capacity to expand. Okay, I'll tell you now. I'll explain you with an examples. For example, their usage. Currently, the PPE or plant property equipment for manufacturing vehicles was limited to only 1,000 vehicles a day. So the company wants to verify, okay, the DEF Limited would verify whether actually 1,000 vehicles are being produced on a daily basis, or they are operating at 50% capacity, 40% capacity, or at what capacity they are operating on an average in a month, in a day, or in a year. Number two, need for a change. Let's say the plant was set up in early 2000s. In that case, if the plant is set up in early 2000s, then in that case, it might require a replacement, need for a change. Okay. Reason, because they might not be working efficiently. They might be working on, kind of a condition where a huge amount is spent behind the repair and maintenance. So kind of, what repair and maintenance is required for that machines or for that PPE to work. Okay. So that will define whether there is a need for the change or not. Then, sorry, then their health again, need for the change and their health. For example, okay, they will continue or they can be used for next 10 years or next 5 years. Next 5 years can be used. Okay. So that is their health, whether they are, of such nature that, we can use net for the next 5 years or not. Cost of replacement. Let's say the whole manufacturing facility requires a replacement because their health is gone. Okay, that is gone now. So the cost of replacement, let's say, is 1,000 crores. So the asset as of today are of only 200 CRs, but the replacement cost is 1,000 CR. Physically present or not. Okay, so kind of an existence check through count and capacity to expand. So let's say today company is producing 1,000 vehicles. Can they expand? Or can it be, expanded to, sorry, 2,000 units per day? Okay, or 3,000 units per day. Now, with respect to the expansion, there are lot many things in picture. Let's say whether they have space within the manufacturing plant to expand the production capacity, whether it is feasible after installing multiple machines, multiple manufacturing lines to expand to 2,000 units. Because at times there is a constraint from the environmental laws, raw material supply, or there's a constraint from electricity or water or something like that. Okay, so there could be a lot of constraint which which might not allow you to expand your production capacity. So those things can be also can come into the picture. Now in due diligence, all these things are verified. Now this is just one part. We were talking about the commercial. Okay, we were talking about commercial and operational due diligence. This is one of that such part, one of that such commercial due diligence. Now it can be again market based due diligence. marketing related due diligence. For example, market slash competition due diligence can also be there as a part of commercial. What is verified in this? Like who are competitors? How company is performing compared to peers. For example, earlier this market share was 18%. Earlier this market share was 18% in 2022. Now this is 12% in 23. So the company is not performing well. That's why it has decreased. If this has decreased, then competitors are performing well compared to the company. So that will be verified. Like who are the competitors? How company is performing comparing to the peers, compared to peers. Like there's a change in the market trend, kind of change in consumer or customer preference. How many of you have noticed that nowadays a lot of car companies they are focusing on SUVs rather than the sedans? How many of you noticed that? That more SUVs are being produced compared to sedans, sedan car. How many of you noticed that? Like more sedans are there in the more SUVs are there in the market compared to the sedan car. I can name the companies who are just producing now SUVs, no sedan. Earlier they were producing the sedans, sedan car, either hatchback, either SUV. That's it. Now that is a change in customer preference because everyone wants a SUV, not a sedan. Okay, everyone wants to take their car to the mountains and everywhere. So that's why everyone is preferring sedan, luxury sedans. Earlier, for the luxury segment, it used to be a sorry, SUV. Earlier, for a luxury segment, it was sedan car. Now, for luxury, it is SUV. Okay, everyone wants an SUV compared to us rather than a sedan. So that's why there's a change in customer preference. Now, once there is a change in the customer preference, it will negatively impact the production and the product mix of the company. Okay, for example, BlackBerry. In a particular period of time, BlackBerry mobiles were on top. Why? Because it was required by the customers. But gradually, the preference changed to iPhone and Android. Okay, to touchscreen from that particular keypad mobiles. So BlackBerry went out of the market. Now that was a change in the customer preference. So decrease in market share in due diligence, and when there is a decrease in the market share or when there is a market share, the investors try to identify, okay, whether this is decreasing over the time, because that gives you clarity about, okay, whether the company is in a decline phase of its life cycle or what. How many of you, okay, have read about business life cycle? Can anyone tell me about business life cycle? Very good, correct. The way electric cars are in demand as of now, they are growing. So kind of change in the customer preference also impacts your everything. Anyone can tell me what is business life cycle? Very good, Mancha. Various stages of business life cycle. Come on, guys. Anyone? No? Okay. I'll just show you with an example. This is the business life cycle. Okay. Yes, correct, Suraj. Correct, Namrata. Correct, Naja. Correct, Tanisha. Tushar. Very good, Namrata and Mancha. Yes. So, launch, growth, then there's a shakeout where they reach on the maturity, okay, and then they decline. So, if everything is done appropriately, then at the time of decline, if the company is okay rectifying their product, then it may again go to back. If they are not, then it may go to down. Okay. Now, during in due diligence also, it is identified okay at what position the company is, whether the company is into the growth phase, it is in the maturity, or it's into the decline phase. Accordingly, whether the company's cash position or company's profit position is there. Okay, so accordingly it is tracked. Okay, at what position the company is and what is the cash and kind of profit position of the company. So let's say I'll say a company is at decline stage, so their cash will be low, their profit will be low, and accordingly everything will be verified. So this is one example of commercial due diligence. Commercial due diligence, one example of commercial due diligence. Okay. Then comes the financial due diligence. Now, financial due diligence, again, it involves due diligence of the financial matters. Let's say, for example, you take a audit. Okay. Whatever you do in an audit, multiply by 2 or 3 times. Okay. In-depth analysis. That will give you, financial due diligence. Means you are verifying each and everything to its detail, to its background. So it's not about the sample testing. Kind of say you can say you are going through all the transactions. Then comes the tax due diligence, very important due diligence that is being done. And the tax due diligence, as of now, whatever is done is with respect to you can say that whenever there is a merger, acquisition, or a start of a new company or a project, or someone wants to start a new business in some other jurisdiction or territory, at that particular point in time, this tax due diligence is taken care of. It is being performed to verify whether whether uh, kind of what tax implications will be there, what tax benefits can be obtained, what is DTAA requirement, okay, what benefit I can get from DTAA. So all these things are studied, all these things are understood in a tax due diligence. So let's say today I tell you with respect to I want to start in business in South Africa. Okay, I want to start a business in South Africa with respect to the wood cutting, or I kind of I want to set up a paper manufacturing unit in South Africa, or some other thing. Let's say not paper. Let's say some other company in South Africa. So now the question comes is, okay, what will be the tax implication? What kind of entity it will be there? What will be the tax implication in South Africa and in India? Because I am the Indian resident. Okay, what will be a tax implication on me as an Indian resident earning from a company which is in South Africa? Okay, or kind of you can say that what benefit I will get if I repatriate the money back to India, or profits I earn in that particular business in South Africa. Or let's say the company is already there. Another company in India wants to invest the company in South Africa. For example, this example over here. Let's say XYZ is already there in South Africa. This is South African company and this is Indian. Now DEF Indian company wants to acquire XYZ South African company because they want to enter in the South Africa market. Okay. So if they want to enter into the South Africa market, then they will do a due diligence and they will understand, okay, that okay, what is requirement, what will be the tax implication and everything. And if I give you famous example, okay, if I give you famous examples, uh, you might have heard about a company that is SoftBank. Okay, now SoftBank is a kind of a company which invests in multiple companies in India. They invest in like they invest in a lot of companies in India. Okay, let's say for example they want to invest in some business in India. Let's say XYZ startup. Okay, before investing they will go and they will check, okay, what will be the implication if I invest in that particular company in India. Okay, like for example, hypothetical example, okay, what will be the taxability of the dividends that we will receive, or the interest that we will receive, or capital gain that tax implications of the capital gain that will be there after selling the shares. So all these things are studied in your tax due diligence. Hmm. Sometimes tax due diligence is also known as a tax advisory services also. So some people call it tax advisory service test. But again, tax due diligence where you analyze taxation matters with respect to financial status of a company in detail. Now there is one good question. I'll come on to that also, but let's take it now. Can internal auditor perform due diligence? Can internal auditor of the company perform due diligence? Very good question. Can internal auditor of a company perform a due diligence? Come on, guys. What do you think? Can an internal auditor of a company perform a due diligence? Let's see. Yes, yes, yes. Okay, Namrata. Okay, Mansha. Okay, Tushar. Okay, Suraj. No. Okay, you are saying no. Come on, guys. What do you think and why? If you're saying yes, then why? Come on, guys. Okay. So, because nothing specific to the area as due diligence, okay. Internal audit play a crucial role in the due diligence process for an organization, okay. Because it's a job of relevant company employee, okay. So, answer is can and cannot. Like depends upon the investor totally. They may ask their internal auditors to perform a due diligence, or they may ask someone else. There is no guidelines, there is no specific requirement that okay, this is the person who should perform the due diligence. But usually there are separate teams auditors. So internal auditors are part of the due diligence. It's not they are not. In a lot of cases, they are part of the due diligence team. But it is not that that internal auditors are the only one who perform the due diligence. That is not the case. So in a lot of companies, internal audit department has these responsibilities to perform due diligence. Let's say, for example, financial due diligence. They may perform IT due diligence, legal due diligence. Okay, so you might have heard about different kind of internal audit departments. So somewhere you have a IT internal audit department, you have a compliance internal audit department, law legal compliance audit department. You have a financial internal audit department, financial related audits internal audit department. Okay, so different kind of internal audit department can be there, and for example, there is one specific tax internal audit department. That's a new concept that is coming up in the market, that they have a tax internal audit team looking for only the tax related matters. Okay, tax IA, that is known as. So if these teams are there, if these departments within organizations are there, they may go and perform a separate due diligence. As of now, there is no specific guidelines or way to perform a due diligence which is there in a law, regulation, or standard. Reason, because I'll tell you why. Due diligence is a subject specific assignment. Okay, means why it is being performed, it depends upon the requirement. Requirement changes from one assignment to another in a very different way. It is being performed on a request of a investor, kind of agreed upon procedures. Okay, kind of a agreed upon procedure that we saw in audit. So investor requires something that is fulfilled by the due diligence team. Okay, and the requirement may change from assignment to assignment or investor to investor. That's why there is no specific single guideline which can be applied to the all due diligence department or assignments. Okay, then we have a IT system due diligence. I already discussed in detail. Legal due diligence, environmental due diligence. I'll show you some example reports also, which are available in public domain. But majority of the due diligence reports are confidential and are only for the company. So you might not find those many due diligence report in the market, but yes, I have some examples for you. Personal due diligence. Okay. Now, let me show you one of the due diligence report. Okay, as an example for you. Like, then we can proceed. This is technical due diligence summary report on plant configuration. This is a technical due diligence, okay, which was performed in July 23 for a particular solar plant. It may or may not be the similar to other due diligence report. Again, it may not be similar to other due diligence report because the structure of a report, the way the reports are drafted, the way the due diligence are carried differs from assignment to assignment. I'll come to environmental due diligence also, Mancha. See the table contents. Okay, table of contents. What they have? First, they have introduction. They have about the plant. Let's say about the project, what technology is being used. Okay, everything about the plant and technology, power configuration. Okay, they have about another project. This is another project. Again, they have detail about that. They have another project over here. Okay, another project. This is one more project, different project. They are mentioned, they have multiple projects in the picture. Okay, fine. So various different projects are there. Okay. And in each of the project, they are talking about, see, in each project, they are talking about the project technology, some infrastructure that is being used. Okay. With respect to the technology, then project design, configurations and everything. So if I just show you quickly one of the projects and, see, this is how they have studied about the project, where the project is located, what is the particular scenario about the project, about the project, basically everything they are, providing. Okay, then they are talking about the technology, what technology has been utilized in that. Okay, warranty, inverter, or transformers, DC configuration, AC configuration. Okay, everything has they have verified. Now this report is then okay is then submitted to the investors. Let's say, for example, I want to invest in one of their plant. Okay, let's say I want to invest in their one of this particular plant. What is say this PLG plant? I want to know everything about the PLG plant. I'll send my team. Okay, do a due diligence, technical due diligence of a PLG plant, PLG pattern plant. They will go. They will verify. Okay, how much far it is. This is situated 28 kilometers away from this particular village, 75 from this, everything. So they will provide me. Okay, they went the site, they verified it. It is at this particular location, this much far from this city, and this is how it looks. The satellite image. Okay, technology. They will say, okay, we have verified the technology which is used. It includes these kind of inverters, modules, and this is the particular things which are used. Okay, this is the PV module that is used. The warranty is for 10 years. Okay, so I will be assured. Okay, fine. Now, there is a warranty, there is a equipment. Okay, the linear performance warranty guarantee over power output at the end of 25th year. So till 25th year, I can get a good amount of power. That is good. Okay, technical characteristics of inverter, the inverters which are used, their technical characteristics or the model that is used. Warranty, how much warranty is there, technical characteristics of IDT, okay, project design, then AC configuration, all those things, will be there in this particular information. And accordingly, they will prepare a report and give it to me. And I will view the report, and then on the basis of this report, I will take the decision whether to invest or not. Hypothetical example, which I'm showing you. This is one of the example of a technical due diligence report. I'll show you one more due diligence report. This is environmental and social due diligence report. This is now again into the, I would say in trend, because part being related to the ESG, part of the ESG analysis. Uh, okay, every company is now focusing on environmental and social impacts of their project. So if any company or any investor, before investing, they want an environmental or social due diligence to be carried out for that particular project. Okay, so again, you can say a part of a ESG drive that is being carried out everywhere. Now let us see the table of contents. We will able to understand about the particular report over here. I'm just talking about the report. First, we have an introduction about the project, approach and methodology. Now this approach and methodology will be of the due diligence. What approach they are using, the methodology, review of available documents and data collation, describe the sub-project activities, discuss the key stakeholders, baseline environment and social profile of the project area, screening activities, identification and assessment of impact, social and environmental impact, developing management action plan, scope of the work. Okay, then environmental social profile of the project, everything is in detail given there. Okay, impact, every impact is given. Just for example, if I show you climatology, groundwater hydrology, ecology sensitive areas. Okay, key applicable regulations land and social, key applicable regulations environmental and social impact assessment, impact during design and pre-construction phase, impact during construction phase, impact during operational phase, impact during decommission phase, gender-based gender assessment and development, grievance redress mechanism, compliance with applicable laws, rules, and regulations of the jurisdiction. Okay, finding of gap analysis, implementation schedule and responsibility, recommendations, whatever they have. So just see what and how the report is drafted. And if I just show you the methodology, that part, see approach. So this is how this is being performed. Like the approach, if you see the approach for the due diligence, okay, the methodology adopted for the, conducting environmental and social due diligence for the proposed intervention is given in this figure. This is 2.1, where the way that they have conducted social and environmental due diligence. So what they will do is they will review the available documents. Okay, review the available document and data collection. Okay, then they will brief description of the subject of the sub project and the activity. They will identify. They will do a field survey and key stakeholder consultation to get this document. They will discuss with the host population to get this document. Description of the baseline environmental and social portfolio of the project area. They will identify that. They will perform screening activity, identification and analysis of environmental and social projects impacts, development of management action plan, and preparation of ESDDR. So that is the particular methodology they have adopted while conducting the social and environmental due diligence. Again, is this a standard methodology? Answer is no. Is this the only methodology? Answer is no. There could be different methodologies based on the different kind of assignments. Okay. Question is chartered accountant need to have any other qualification for the due diligence? See, in majority of the cases, rather than the other qualification, a lot of people ask me this question: do we need to have other qualification? It's not about the qualification, it's about the knowledge. So to conduct a due diligence, you as a chartered accountant are well versed with the way of the due diligence. Okay, let's say for example, I ask you, do you know due diligence? Do you know how to conduct it? Yes, you know it. But when it comes to different type of due diligence, the only thing is you need to do just a bit of research, knowledge gathering about the assignment. The concept is same of the due diligence. The matter that what you need to perform is same, but the only subject matter differs. For example, I give you a tax due diligence. Okay, tell me about the tax due diligence with respect to this company. What do you say in South Africa? Okay, South African company. Give me do a tax due diligence of a South African company. Now, to conduct this due diligence, will you go to South Africa and get a degree in taxation? If I ask you to conduct a tax due diligence with respect to entity which is there in the South Africa, will you go and get a taxation degree, or you will gather the knowledge which is available from different sources about the tax laws prevailing in the South Africa, and on the basis of that you will prepare the due diligence? What will be the appropriate approach? What will be the appropriate approach, guys? Will you go to South Africa to get a degree in taxation, or will you, being a chartered accountant, will perform the research, will understand the tax laws here, and on the basis of that you will perform the due diligence? Of course, when you will gather the knowledge, you will perform the research, you will meet different people who will be expert in South African tax laws. Correct? You will meet different people, or you may hire an expert who might be expert in the South African tax laws. Okay, gather the information from available data and sources and do the analysis. Or we may hire at the end that, okay, an expert in the South African tax laws. Okay, that we could do for our consultation. That doesn't mean you need to go and, get a taxation degree in South Africa. No. So, simple point is, do we need any other qualification apart from being a CA? In most of the cases, no. Reason because you as a CA are well versed with the knowledge of the due diligence, how to carry out. But when it comes to a specific subject matter, technical requirements, you may require to hire an expert. That's why we have in audit also using the work of an expert, because it is assumed that, other than the accounting and auditing, if there is a technical area, like for example, climatology, in that case, you know how to do it, how to do a due diligence, but you need a specific knowledge about the climatology or some, land pollution or something. So you may hire an expert who will provide you the required information, because you know how to do the due diligence, you know how to get it, how to, prepare the report, you know what to expect from that expert, what to provide as an information to that expert, and what output is expected from that expert, and that how to use that output. Okay, and then you prepare the report and you submit it to the stakeholders. That is, we need to understand here, we are not to understand, okay, how the environmental due diligence is done, but overall how the due diligence is done, so that in future if you get an assignment, you might require an help of an expert in some areas, but at the end you should be able to drive the whole due diligence assignment. You should be able to perform from start to end the due diligence assignment with your team. Okay, I hope you got the answer to the question that, okay, whether any additional qualification is required or not. Same way, let's say financial due diligence, one of the example is given. Okay, financial due diligence. Now, if you see financial, what happens in the financial due diligence, the way I was talking about, that a brief history or target of the company or background as promoters is verified. As I told you, what is the company doing? What is the market share? What product the company is dealing into about? Okay. Uh, Target history of the company, from where the company started, how it has reached till here. For example, a classic example, you take it, let's say a company which is gathered through mergers and acquisitions, which has become very good company through mergers and acquisitions. Okay, now if a company is part of the mergers and acquisitions, let's say for example, any company in the market, Mintra, Flipkart, Amazon, whatever you take it as a name. Okay. So how the company started, What is the background of the company, who all are involved as a stakeholders or promoters or shareholders of the company, which fund house has invested in the company, whether the company has reached till here by amalgamating or getting merged with other companies. Okay, so for example, there was a company. I'm not sure how many of you have heard the name. You might have already heard it. Grofers. Grofers was a company that became another company. Like they invented themselves. Okay, that became into a Blinkit. Grofers changed its name and became Blinkit. And there was a lot of investment by the SoftBank, Tiger Global, and Sequoia Capital. In 22, Zomato acquired Blinkit. So, how the company has reached till here. So, let's say, for example, before acquiring in 2022, Zomato, that is definitely for sure they might have conducted, a detailed due diligence about the company, where it started from. Okay, earlier it was Grofers. Now it is known as in market as a Blinkit. So a lot of detailed analysis, due diligence might have been performed about the brief history, target company, and background of its promoters. Okay. Then, for example, next thing is like nature of business that will be verified in the history, location of the production facility or warehouses, employment, production or service market, history of the business with important suppliers and goods and suppliers, inventories, franchisee license patents. A lot of things are there. Then accounting policies, very important. When it comes to finance due diligence, financial due diligence, accounting policies are the key and important part to understand how the revenue is recognized, how the things works within an organization. Okay, whether it's a contract based company, whether it's a percentage of completion method, whether it's a straight line, how the revenue is recognized, whether they follow IRS, NDS, IFRS, NDS, or normal AS, on what basis their accounting policies are drafted. Then review of financial statement, like you will examine the financial statements of the company, what is the applicable financial reporting framework, how the financial statement are prepared, what is the financial year, okay, of the company. So operating results, financial results, cash flows, everything will be focused upon. You will compare past 4 to 5 years results with trend analysis, ratio analysis. Everything will be done in order to provide a background about the financial aspects of the company, and that is done in detail. It's not a 1 or 2 ratios. No, there are multiple ratios which are analyzed over the past 5 years. Predictions are analyzed, forecasts are prepared, financial numbers are seen, disclosed, discussed. A lot of things are done. Taxation matters, again, cash flow related, we have discussed. Okay, financial projections, as I told you, forecasts are done, forecasts are verified, management and employees, statutory compliances. Okay, so these are certain areas which are discussed in detail in financial due diligence. Then the next question comes is how to conduct a due diligence, the methodology. Just now we saw a particular methodology over here. Okay, and as I told you, this is not the only methodology to conduct a due diligence. This one. This is not the only methodology to conduct a due diligence. For example, this is another due diligence report which I'm showing to you. Okay. Now, here, this is the due diligence report with respect to the supply chain. And here, if you see the methodology, it is differently followed. Like risk identification has been done, key risk at a particular entity. Okay, what is the key risk? A summary kind of it is prepared over here, which has key risk management structure, internal control record keeping systems, and everything. A small public due diligence report of a particular project. So Again, it may depend upon the type of assignment, and it may depend upon what assignment is being performed. That will decide, okay, what will be the structure of a due diligence report, and what will be the basically the methodology that is required to be adopted. If I show you another due diligence report, it's an old one of 2017, but still relevant, I find. So everything, whatever I'm showing to you, is a publicly available data. Okay, you can go and you can uh, get it by yourself also from internet. So this is a one of the infrastructure projects due diligence report carried by World Bank. Okay. Now, if you see, let's just show you something with respect to the methodology. Methods for the due diligence investigation. Okay, I'll go to the page number 11. I'll show you. See, this is the method for due diligence investigation. Okay. May adopt the following method, research method. For example, respective desk work, consultation meetings, site interviews. Desk work mainly referred into the collection, review, and verification of files, documents which were relevant to the resettlement of the linked projects. Okay. Then consultation meetings, various consultation meetings have been done. Files and documents they are talking about, Then site interviews. During this period, the site interviews will be covered with various, people. Public consultation, list of they have just given the participation list. Meeting with people, interviewing the people affected by a particular project, interviewing with the people affected by a particular project. Okay. Then that will depend upon the due diligence assignment, based on what methodology is being assigned, followed. But usually it is kind of you review and report. When you are performing a due diligence, you need to understand why you are performing that due diligence. You need to understand the subject matter. As a result, you need to define the project, define the due diligence first, then four-step approach. Okay, that first start with an open mind. Don't assume anything will be wrong. Just define the project, what project it is. Get the best team of people. Okay, you can identify for the due diligence. Okay, get help in all areas to have a 360 view if it is full due diligence assignment. Talk to customer, supplier, business partners. Take a risk and management approach. Prepare a comprehensive report detailing the compliances and substantive risk and issues. So you will discover about the project or the subject matter. Okay, you will diagnose. Okay, or diagnose means you will identify or will perform risk assessment. You will deliver basically on the basis of whatever risk assessment and subject matter you understood, and you will design the report and everything, plan and procedures. So you will design the plan of due diligence. Okay, and you will then deliver the report and design the report and everything, and then you will defend, like you will go and monitor or provide the details of the due diligence. For example, reporting, action plans, management action plan. Okay, all these things you will provide. So this is the brief content, executive summary, introduction, background of the target, objective, terms of reference, brief history, shareholding pattern, observation of the review. Okay, assessment management structure, assessment of financial abilities, valuation of assets, comments on property, terms of lease, assessment on operational results, taxation, litigations, net worth, interlocking investments. A lot of things can be there that is totally based upon the type of due diligence assignment. So that is all about the due diligence. Any doubt? Any doubt? Any doubt, guys? No? So there is one question with respect to the due diligence, that is there any SEBI regulation for the due diligence of listed entity? Answer is no. As of now, there are no. Okay. If no further questions, then let's proceed to the next topic, that is investigation. Okay. Now in investigation, guys, how investigation is different from the due diligence, I'll explain you. And that can be well understood by the type of investigations that are being carried. Okay. Let's go to the type of investigation first. And then we will understand how investigation is different, okay, from due diligence. Just a minute. So you can come to 17.32, page 17.32 in your study material. Okay. These are the types of investigation that we will discuss today. Very important. Unlike the type of due diligence, some type of investigation come from a law or a regulation. Okay. Come from law or regulation. For example, now investigations can be statutory, non-statutory. Statutory, which means that it is prescribed by a law or regulation, which we are seeing for the first time, which was not there in case of a due diligence. Law or regulation never prescribed a due diligence, but here law may prescribe the investigation. Okay. Now, what kind of investigation can be done? Investigation can be done either into first statutory one. Investigation can either be done with respect to affairs of the company, or investigation can be done of the ownership of the company. Okay. Now, when it comes to affairs of the company, it can be done by inspector through an order under section 210. Okay. By SFIO under section 212, and other cases are there under section 213. And when it comes to the ownership of a company, it can be done under section 216 of Companies Act. Okay. Non-statutory. Non-statutory investigations are kind of, they can be done on a request of a particular, stakeholder. Let's say, for example, investigation on behalf of an incoming partner, investigation for valuation of shares in private companies, investigation on behalf of bank or financial institution proposing advancing to a loan to a company, investigation of frauds, investigation on behalf of individuals or business firm proposing to buy a business, investigation in connection with the review of financial forecast or profit. Okay. Now these can be the various type of investigations. Now the question comes is how investigation is different from a due diligence. Okay, that we'll understand with one example. Now, the purpose, if I go to the particular differentiation between investigation audit, that will also help you to understand the difference between investigation and due diligence. Okay, the objective of an investigation aims at establishing a fact or happening at assessing or a particular situation. Means why investigation is done. Investigation is done to prove a fact, whether that is happening or not happening. Okay. Whereas due diligence helps you in a decision making. Investigation is a fact finding, okay, procedure. Sometimes due diligence cannot also take, what do you say, nature of investigation. Because if a particular specific due diligence assignment is there to investigate some items, then due diligence may become investigation. But due diligence is wider in scope. In a lot of areas, usually are looked into when a due diligence is performed. It's not only restricted to one area, but in multiple areas, things are looked into. Okay, but when you restrict a due diligence to a one particular area, let's say I'm just looking into existence of a fixed asset, that becomes investigation. So investigation is kind of establishing a fact whether that has happened or not. For example, whether the fixed asset was sold or not at a lower price than what it was, lower price than the book value. Or for example, company was having shares of subsidiary. Okay, the company bought the shares or acquired the stake in the subsidiary, let's say rupees 100 per share. Then they sold the share, okay, in exchange of the asset. Now there is an investigation happening upon the company to identify whether the shares were sold less than for which it was bought. That's an investigation specifically targeted to a particular area or to a particular subject matter. Okay, as I told you, investigation can be governed by statutory or non-statutory framework. Okay. Now, whether an investigator is required to undertake 100% verification approach or whether he can do a selective verification. Okay. For example, let's say I want to verify whether, all the fixed assets exist. Can I take a selective verification approach? Depends upon the case which is there under the investigation, what type of, outcome the investigator wants to provide. Whether investigator wants to provide kind of only a reasonable assurance related outcome, or he wants to make sure that all the fixed assets are physically present. Based on the type of investigation, that depends. Majorly in investigations, when they are specific categories, specific type of investigations, 100% analysis is done. But however, there could be certain investigations where you perform test check, sample testing, depending upon number of transactions, depending upon number of items to verify all those stuff, the time available and everything. Okay. Periodicity, there is no period for the investigation. It can be suggested by anyone at any point in time. Requires a detailed study and examination of the facts and figures. Okay. There is no limitation with respect to the investigation. Audit suffers from the inherent limitation with respect to, not everything can be identified, but investigation is not, restricted by those inherent limitations. Investigations requires conclusive evidence. Means it should not be that, evidence on the test basis, checking samples. Okay, it should be conclusive. Okay, either yes or no. There is not a requirement of the gray area. And again, when it comes to a certain kind of investigation where you can perform test checks, over there your reporting also differs. Again, analytical procedures can be performed in an investigation, that is perfectly fine. Investigator can be appointed by third party also, and the outcome is for the people who are who are hiring you as an investigator. Okay. So this is something background about the term investigation. It's not a limited review report. No, there's a huge difference between limited review report. Investigation is kind of 100% checking. So let's say if I talk about meter of assurance, scale of assurance. Okay. So let's say this is the scale of assurance. Okay. This is here we have no assurance, means agreed upon procedures. Somewhere in the between, we have limited assurance. Okay, and we call this particular type of assessment limited reviews. Somewhere more we have then reasonable assurance. And we have for that audit. And at the last, we have absolute assurance. For that, we have certain certifications where the wordings true and correct is used. And you can say then we have investigations. Okay. Investigations, you have then forensic accounting. Now, investigation will include fraud investigation. Okay, all those things. So that is absolute assurance, kind of, not limited assurance. Now the question comes where the due diligence fall. Due diligence again, it's somewhere between the audit and absolute assurance. Somewhere between, because again it depends upon the type of engagement that is being performed. It is more than the audit, sometimes absolute assurance also, but again that's somewhere between here the due diligence lies usually. It may be absolute assurance, it may be reasonable one. That depends upon the type of engagement that is being there. Namrata, you can refer to the lecture with respect to the limited assurance when we discuss about limited assurance essay. So you can refer to that particular chapter also. So we discussed SAE, that is examination of prospective financial information, assurance reports, or you can say we discuss about the SRE. Over there, I explain in detail what is limited assurance, what is detail difference between limited and reasonable assurance. So, for example, when we were discussing SRE 2400 and 2410, okay, review assignments, review engagement. Over there, we discuss about the limited review engagement in depth. So you can refer that also. Any doubts? So there is a question, do we give opinion in due diligence? You prepare a report. Okay. based on the subject matter, like whatever the assignment of the due diligence was, whether to tax due diligence or. So in your report, it's not about the only opinion. If I just show you this particular one report, if you see, you have this one recommendations. So in your report, it's not about the opinion, it's about the recommendations. Okay, what you recommend after performing the due diligence, because it's different from audit. In audit, you give an opinion, okay, whether the financial statement comply with the applicable financial reporting framework or not. Here in due diligence, it's not about the opinion, it's about the recommendation once you do a due diligence. Any doubt till now? Any doubt? No? Okay. If no further doubts, let's take a quick 10-minute break. After the break, we'll gather back and continue the investigation. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. Let's continue the discussion. Okay. So we were discussing about investigation. Now let's understand, various type of investigations that are there in the, that can be done. So I'll just provide a brief about those investigations. Okay. Uh, let's say for example, first, by inspector through an order by the central government under section 210. Okay. Now, when it comes to section 210, that is investigation into the affairs of the company. What happens is that when central government is of opinion that it is necessary to investigate into the affairs of the company, then on the report of the registrar or inspector under section 208 or passing in, what do you say, special resolution by a company or in the public interest, it may order an investigation. Okay. So when it is basically necessary to do an investigation into the affairs of the company at that particular point in time, investigation is performed. Okay. Basically, what happens in section 210, when central government is of opinion, that it requires to check what is the background about the particular, who are the basically, company, what company is doing, what company is working upon, what is the business of the company, into the affairs. Basically, is there anything done prejudicial to the interest of the company? In that case, under section 210, this investigation is performed. Okay. So you can say section 210, investigation by the order of the central government or by the inspector. So when CG is of the opinion that investigation is necessary, report received from the registrar, a special resolution has been passed by the company or in the public interest. Okay. Then investigation can be carried out under section 210. Section 212. Okay. Investigation into the affairs of company. Okay. By SFIO. What section 212 talks about is when central government is of the opinion that it is necessary to investigate by SFIO because they might have received a report from the registrar under section 208, intimation by shareholders in public interest, or any request received from the central government or state government. In that case, central government can, order SFIO to carry out the investigation under section 212 of the Companies Act. Okay. In case if the investigation is handed over to SFIO, then no other agency will carry out the investigation if the SFIO is doing the investigation. And employees and officers of the company are required to provide all information to SFIO. Then comes the investigation under section 213, that is other cases. Now, other cases, if I talk about, is basically when tribunal can order the investigation, application made by 100 members or 1/10 of the share capital holders or 1/5 of the members where there is a no share capital. Again, 100 members, 1/10 holding share capital or 1/5 of the members. Okay. If or application by any other person. Okay. When they say that business is conducted to defraud the founders, to defraud, or founders are involved in fraud, or members are not informed about the affairs of the company. If this is a scenario, then under section 213, other cases, investigation can be carried out. Clear? So these are the three sections, 212, 210, and 213, where investigation into the affairs of the company can be carried out. Now, there is another type of investigation when it comes to the investigation into the ownership of the company to identify who is the real owner of the company. Okay. In that case, when it comes to investigation into the ownership of the company, Section 216 of the Companies Act comes into play. Okay. If central government believes that there is a reason to do so, if central government believes there is a reason to do so, okay, to identify who are the real owners of the company or has a financial interest because of the layer by layer, multiple layer investment. Okay, who are the controlling, who is the controlling entity, who are the controlling the company, who has a material influence on the company, or who has the beneficial interest or ownership in the company. To identify such things, under Section 216 of the Companies Act, central government can, appoint any investigate inspector and they can order investigation. Now, under Section 217, there are certain powers given to the inspector. Okay. Under Section 217, there are certain powers given to the inspector. Now, who is the inspector? Inspector is the person who is appointed to carry out the investigation. It can be any person. It can be employee, or it can be a government officer, or it can be a third party employed by the central government. Okay. So powers such as, to provide basically documents. Just a minute. When it comes to powers, it kind of, provide the documents and information to the inspector. Okay, inspector can ask for any additional information. Inspector can take into his custody the paper or information. Inspector can examine on oath, like the people who are there, which it requires production of books, summon persons, inspection of records. Okay, he can fine for disobedience. Okay, like if there is a failure to provide information, then there's a fine or term or punishable up to 6 months or a fine of 25,000 to 1 lakh rupees. Okay, if an ongoing offense is there, then 2,000 rupees every day a fine can be there as per Section 217. These are the powers and of the inspector, certain powers. Okay, then powers of inspector to conduct investigation under Section 219. Okay, this is a special section which gives powers to the inspector to conduct investigation into the affairs of the related company. Under Section 210, 12, 13, okay, inspector can investigate into related or other body corporates. Other body corporates are kind of a related entities. Okay, it can be subsidiary, holding, managed by a person who was either MD or manager or other company, BOD nominee, or accustomed to as per the instruction of the BOD, those companies. So under those investigation can also be done into affairs of those companies, related companies, kind of. These are known as related entities. So under Section 219, inspector get the power to conduct investigation into the affairs of related entities. Okay, this is a kind of, you can say, summary about statutory investigation. Section 2110, 2112, Section 2113, other cases we saw 2116 investigation into the affairs of the company. Any doubt till now? Any doubt? Any doubt? So I have prepared a quick summary with respect to difference between audit and investigation. So the objective of your investigation is basically, respect to the true investigation is fact finding or situation or assessing the situation. Okay. But when it comes to the audit, it is true and fair view or expression of the opinion. Scope is a financial statement, or scope in the case of audit is decided by the law. Engagement in case of an investigation, it's based on assignment or fact or a situation which is required to be investigated. Again, periodicity, investigation is basically takes years to complete. So it's not a single year job. But in case of audit, it can be annually, half yearly, or quarterly audits. Limitations, there are no limitations in investigation, whereas there is an inherent limitation in the audit. Evidence is a conclusive in case of a investigation, whereas a reasonable assurance is given in case of a audit. The regulatory authority, third party or company can order investigation. In case of an audit, appointment is done by the company, BOD or shareholders or a CNAG. Okay, so that's the quick summary and the difference between audit and investigation. Any doubt, guys? Okay, let's understand the process of investigation with an example. Okay, let's say there is a SEBI appointed ABC and company who are the investigators to investigate the ODI transaction performed by DEF Limited. Okay, so there is a ODI transaction that is known as a subject matter, basically. The subject matter where, which is, being evaluated, which is investigated. Now, the subject entity is DEF Limited. Investigators are ABC and company. Okay. And SEBI is the regulatory authority which has appointed the investigators, or you can say kind of inspectors, to investigate about the subject matter related to a subject entity. Okay. Now, when regulatory authority will appoint the investigators, they will provide a document or a written scope to evaluate the subject matter. They will provide, okay, what you are required to look into. So from there, the first thing comes about the investigation is the scope. Okay, the scope of investigation. Now, when we are doing an investigation, the first thing is about basically what is the scope, define objective of the investigation, why the investigation is being done. Okay, what is the reason of doing the investigation? So that is the first thing which comes when we do any of the investigation, any. Okay. Then the second thing we need to understand is objective behind the investigation. So that, let's say, scope is the ODI transaction. That is the scope of the investigation. Okay. But the question comes is then, okay, if this is a scope, okay, then in that case, what is the objective? What we want to understand with respect to the ODI transaction? Okay, what we are required to do with the ODI transaction? That is something important to understand. So objective and the scope both are necessary to define for a particular investigation. Okay, so determine objectives and scope of the investigation. That is the first part. Means transaction of a FDI is done through a crypto, or investment made by a subsidiary of DEF, who is the beneficial owner of the investment, price paid for the investment, or you can say kind of a share price, or premium shares issued at premium or discount. Okay, a lot of things. So that is the objective of the subject matter. Scope is the subject matter okay, ODI transaction, objective is to identify whether this particular transaction has been carried out, okay, in accordance with the ODI regulations or not. That could be a subject matter. Now, second is formulating the investigation program, kind of, preparing the program, like what we will look into, okay, what will be the evidence we will collect. For example, we will understand what is a crypto held by the company, amount invested in crypto. Let's say company has done transaction through crypto, okay, amount held by the company as in crypto during the year, then previous investments and current balances of investment, bank statement records to identify the investments. Okay, so all these things will prepare a plan how to do the investigation. We will then collect the evidence. We will do inquiry, we will test, we will interview, we will collect different evidence with respect to ODI investment made by the company. Okay, we will see whether the crypto transactions were made to avoid the ODI regulations or not. Kind of that, if company has chosen that particular model or mode of investment so that they can avoid the ODI regulations, then we will do the analysis of the evidence and interpret the findings. Analysis the fact, okay, whether the ODI transactions, whether the crypto transactions were done to avoid ODI, avoid ODI regulations. Okay, correlate the fact. For example, number of crypto transactions versus, you can say, investment in subsidiaries. Like what is a trend that company is following? Connection of the evidence. Okay, who bought the crypto? If company bought the investment, so company sold the crypto, company sold the crypto, then who bought it? Okay, or where it went. Sometimes you have a secret holding. For example, investment is done but it is not disclosed in the books. Payment is done through cryptocurrencies, so that nowhere it appears that okay, they are the real owners of the company. So to understand, connecting the evidence and establishing fact with reasoning, you connect evidence and establish the fact. Okay, what is the conclusion? What is the whether ODI regulations were breached or not? So establishing the fact. Okay, then you prepare the report basically. Okay, and draw up your conclusions. So what you do is you prepare the report. Okay, so for example, I will do after investigation. What I will do is I'll prepare the report. What was the detail identified? So for example, one example I showed you about the investigation. Mhm. See, this is in this scenario, it is due diligence investigation. Okay, that is due diligence done in a form of an investigation. And if you see this particular reporting part over here, they have prepared the report. They have provided one conclusion over here. If I go to the conclusion, it says that this is a particular conclusion, whether the resettlement has affected the people or not, and whether the resettlement has benefit to the people's life, What was the conclusion basically after analyzing the whole project? That is the conclusion given in their report. The land acquisition and house demolition policies were strictly in compliance with the relevant laws and regulations. Okay, without any violation of relevant laws and regulations. Land acquisition and resettlement activities were implemented in a legal manner. Okay, without causing any social unsteadiness. Resettlement of affected persons have been completed with their living standards and have been improved in a substantial way. So they are talking about the outcome of the investigation over here. So that is the way of doing investigation. And if you go to page number 17.18 in your module, you will find these steps of investigation over here that just we discussed just now. Okay. So this is the steps in investigation. Both statutory and non-statutory investigation can provide 100% assurance for its behind the subject matter. Yes, they can provide 100% assurance. Any doubt with respect to the investigation? Any doubt? Okay. Another kind of investigation is investigating frauds. Very important topic. Again, investigating frauds is quite different than forensic accounting. Okay, is different than the forensic accounting. Investigating frauds is smaller in the scope when it comes to the forensic accounting. Okay. So let's understand about the investigating of frauds and forensic accounting, both, so that you can have a good understanding of both. I will also talk about some of the fraud schemes and discussions on that particular area. And we will understand how forensic accounting is different than the fraud investigation. It's wider term and it's a one is a smaller term. Okay. Now, if you see, when it comes to investigating frauds, it is the important section for chartered accountants as a statutory auditor is section 143.10, where we are required to provide details about any identified fraud, or if we have a reason to believe that the fraud has been incurred or being being performed by the company or employee of the company or on the company. Okay. And there is a section 447 where the punishment of fraud has been prescribed under Companies Act. So, section 447 basically is there, and which talks about punishment for fraud. Okay. Now the punishment for fraud under section 447, if you see, okay, can involve amount which is 10 lakh of rupees or 1% of the turnover. If the company is guilty, if company is identified to be guilty of fraud, okay, and which may extend to 5 years imprisonment with 50 lakh of rupees, or both. Okay, so there are conditions with respect to fraud, wrongful gain, and wrongful loss committed. Okay, I'll not go into the punishment, but just as of now, I'm just telling you, Section 447, 143.10, they govern the fraud in a company. 143.10 provides responsibility upon the auditors. 447 provides a punishment, okay, for the fraud. Now, we have a SA 240 that we have already discussed about. Okay, the auditor's responsibility relating to a fraud in a financial statement. That's in auditor's responsibility. That's in talks about, you know, what is the responsibility of auditor when there is a with respect to the fraud risk or fraud related to a financial statement. Okay, now fraud can be conducted by those charged with governance, management, employees, third parties, or you know, it can be combination of all. Okay, and fraud, the term fraud has been defined under Section 447 of the Companies Act. Fraud means in relation to the affairs of the company or any body corporate, includes any act, omission, concealment of any fact, abuse of position. Okay, so abuse of position committed by a person or other person with an convenience in any manner, with an intent to deceive, to gain undue advantage, or to injure the interest of the company or shareholders or creditors or any other person, whether or not there is a wrongful gain or loss. That is a fraud. A very wide definition of fraud that has been given. Okay, there are other definition in other laws also, but this is one important definition of fraud. Now, from here, we can identify various kinds of fraud. Okay, various kinds of fraud. For example, it could be fraudulent entries, it could be sales related fraud, it could be collection related fraud, expense related fraud. Okay, it could be payroll frauds, data fraud, technology related, banking related, others. Okay, for example, and usually we divide fraud into three categories: fraudulent financial reporting, which impacts your financial reporting; misappropriation of assets, that is, you misappropriate or you take away the assets which are there in the books. Okay, or the corruption, amount paid, okay, for benefit of the company or for, you know, doing something in your favor or something like that. So usually frauds are broadly categorized into three categories: fraudulent financial reporting, which impacts your financial reporting; misappropriation of assets; or corruption. Now, a fraud can be of two nature together. For example, it can be related to fraudulent financial reporting or a misappropriation of assets together. It is very much possible. That depends upon the complex fraud schemes that are, you know, devised and that are, you know, implemented by the fraudsters to hide the things behind the fraud. Okay. So multiple tactics can be involved, which can classify the fraud into multiple categories. That is perfectly fine. Then, based on these categories, there are subcategories, as I told you: fraudulent entries, like you pass fraudulent journal entries, you you do a sales fraud. For example, you do a sales but do not record it. Okay, you do a sales but the price recorded is less. Collection fraud, you collect the amount but you do not deposit in the company's account, or you collect the amount and you deposit in your own account, or you collect the amount, you deposit in your own account, then you receive a subsequent amount, you then apply that amount to some other debtor. Expense fraud, overcharging of expenses, overcharging of, what you can say, OPE. Okay, falsification of documents for claiming an expense. Okay, inappropriate claim of expenses. All those things comes into a expense fraud. Payroll fraud. Payroll fraud generally talks about, let's say, for example, ghost employee scheme, whereas employee is not actually present, but on the books it is present, and salary is being paid to that employee because he is present in books. Okay, in actual there is no such employee, or employees are working for 6 hours, they are recording 8 hours. Employees, there is a fraudulent activity with respect to the wages of employee. For example, the HR manager and the person who was releasing the payroll, they both are connected together, so they increase someone's salary in the system. Okay, There could be a lot of payroll related frauds. For example, not deactivating the payroll record of employee who left the organization. So employee left the organization and still salary is being paid to that employee. There could be a lot of fraud schemes, a lot. There is no limit to the fraud schemes which are there in the market. Okay. As a result, as a result, understanding fraud has become very difficult day by day. Identification of fraud has become very difficult day by day. So there are some examples given in your module. I will suggest to refer these examples with respect to the fraud. These are type of frauds. Okay. So you should refer these. These are very important and will give you a good understanding of the types of fraud that can be done. Now, and plus you have an explanation of these frauds, various type of frauds. Okay. In your module, I'll suggest to read these, explanations and understand these various type of frauds. Okay. Have a read about these, and then you will be able to understand how many multiple type of frauds can be there. But usually there are some indicators. We called it a red flag with respect to fraud. Okay. Red flags or indicators which can help you to identify whether there is a fraud or not. For example, discrepancies in accounting records. For example, records are half, partial, they are not matching. There is a reconciling items which are not clearing off. Okay, some amounts are not appropriate. So discrepancies in accounting records, conflicting or missing evidence, missing documents, altered documents, or management is saying they don't have the document, pending reconciliations, reconciling items, aged reconciling items are the indicators of fraud. Unacceptable management response. For example, denial of access. Management is not allowing you to do to send data's confirmation or bank confirmation, or management is not allowing you to count inventory or fix asset, do a physical count of inventory or fix asset at a particular location. Okay. Other indicators such as something unusual with respect to accounting policies, estimates, management structure, organization structure, like that way. Okay. So these are the things which are the kind of a indicator, red flags, which help you to identify the fraud. And basically there is a theory, fraud diamond theory, okay, which is then used to identify the fraud. So the fraud diamond theory is an evolution of fraud triangle. It came out of the fraud triangle. Fraud triangle talks about the incentive, opportunity, and rationalization, whereas the fraud diamond introduced one more thing, that is the capability, okay, to conduct the fraud. For example, till now in a fraud triangle, we were talking about incentive to conduct the fraud, opportunity to conduct the fraud, and rationalization by with themselves after conducting the fraud or while conducting the fraud. But no one focused upon the capability to conduct the fraud. Capability means person can utilize the opportunity, can rationalize, and can identify the incentive. Means he is on such position that he is capable to identify the incentive, he is capable to understand the opportunity, he is capable to rationalize with himself because he has such reasons. That is a capability and makes a fraud triangle to a fraud diamond. Clear? So fraud triangle was basically, kind of a part, you can say, this one. If I talk about this particular area, okay, This was fraud triangle basically. This particular area was a fraud triangle which was based on incentive portion, opportunity, incentive, and rationalization. But when one another point came into the picture, that is capability, it became fraud triangle. Okay, very important aspect of a fraud. Now, again, being an auditor, it's our responsibility to assess the fraud risk under SA 240, and under SA 330, we have to prepare a response to address that to that assessed fraud risk. Okay, as a statutory auditor, we have to test manual journal entry. Remember appropriateness of manual journal entry. Okay, in while that is being used in preparation of a financial statement, there are certain areas we assume there is a fraud risk. That is management override of controls and revenue recognition. There are two areas by default they are fraud risk. Management override of control and revenue recognition. They are by default fraud risk. Remember that we discussed in SA 240 and SA 315 and 330 multiple times. And to respond and to create a response to those risk of management override of control and revenue recognition, we have to prepare audit procedures. We have to do some audit procedures. One of that was testing appropriateness of the manual journal entries, which is by default we have to do it. Okay. Again, then detection of the fraud depends upon what audit procedure you are appointing, how much complex the fraud is, okay, the degree of collusion. So these are the factors which affect the detection of the fraud. For example, skillfulness of the person who is carrying out the fraud. Okay, the fraudster. Skillfulness of the fraudster, how complex the scheme has been prepared. Frequency and extent of the manipulation, whether it's an ongoing or it was done one time. What is the frequency? Degree of the collusion involved. Who all are involved? Then relative size of the individual amounts. What is the fraud amount or fraud impact, you can say. And seniority of those individuals means involvement of management. Whether management is involved or those charged with governance. If there is a fraud that is done by MD, CFO, CEO, then it is very difficult to identify because they have all rights, controls in their organization to hide the fraud. So these are certain factors which impact or affect the ability to identify and detect the fraud. Any doubts with respect to fraud investigation, identification? So there is various kind of frauds investigations has been given. Investigation in connection with the review of financial or profit of financial forecast. Investigation on behalf of individual or firm proposing to buy a business. So these are the kind of investigations given. Other than the investigation in case of a fraud investigation, there are various kind of investigations already given. And I would suggest everyone to read these investigations. There are various kind of fraud schemes also given. Please read these fraud schemes because that will give you a good understanding, good clarity. Okay. Any doubt? So investigation on behalf of bank or financial institution proposing a loan or advance to a company. So various type of investigations given and what is done in those investigations in detail. With an example, it has been given. Okay. So that is a must read for you all guys. for you all, without which it is difficult to proceed further. Okay, so you have to read this, you have to go through all these type of investigations and fraud schemes, and you need to understand, okay, how these fraud schemes and investigations are different than other investigations. Now coming to the next part, that is a forensic accounting. Okay, how forensic accounting is different from fraud investigation. Okay, when I use the term forensic accounting, forensic, it is means suitable for use in the court of law. Okay, forensic, the term forensic is something with respect to the when the evidence can be used in the court of law. Okay, now the term forensic and accounting means using the skills, techniques of accounting, using the knowledge of accounting to gather forensic evidence. So, okay, so when I talk about forensic accounting, is using the skills, using accounting skills and knowledge to gather forensic evidence. Now you will ask, what is forensic evidence? Forensic evidence means evidence which can be used in court of law. So forensic evidence is kind of evidence which is basically used in court of law. Okay, that is forensic evidence basically. Okay, now when you use the skill of accounting, when you use the knowledge of accounting to gather forensic evidence about a subject matter, that becomes forensic accounting. Again, when you use the knowledge of accounting plus auditing plus investigation to gather forensic evidence, okay, to gather forensic evidence about a subject matter, that becomes forensic accounting. Now, forensic accounting can involve fraud investigation, may not involve fraud investigation. Okay, forensic accounting may involve fraud investigation, may not involve fraud investigation. The reason, because, okay, when you use the term, when you use the skill of accounting, okay, over a subject matter. Now, subject matter can be identification of fraud, can be just of understanding uh, a complex transaction for a litigation. I'll give you two particular examples, okay, and then we will understand how forensic accounting can be used in different scenarios. We all know about the fraud. I'll give you an example other than fraud. ABC Incorporation entered into an agreement with, now this is ABC Incorporation is a US based company, US entity, with MFN, GmbH, that is again let's say Luxembourg or EU based entity. Okay, entered an agreement with MFM, GmbH, okay, to provide them the usage rights of certain IP, that is intellectual properties, okay, on certain conditions that the amount earned by MFN group by use of, okay, that IP will be shared with ABC Inc. Okay. Now, there was another agreement. MFN already had an agreement with ABC Limited. Okay. MFN already had an agreement with ABC Limited to share all its IP, whether in-house generated or acquired, okay, or acquired for use in its joint venture entity. Again, this was done against consideration of loan provided, not loan, I would say against consideration, okay, that, against, I'll say not consideration, I'll just remove it, against issue of deep discount bonds to Indian subsidiary of MFN. Okay. Now, that the company, that is ABC Incorporation, I will change the ABC Incorporation here, ABC Limited, into another name, that is TEF Limited, because ABC is already taken. Okay. Now, ABC Incorporation is asking to share the benefit, okay, derived by issuance of deep discount bond to subsidiary of MFN GmbH as a part of their revenue sharing agreement. Okay. Now see the complexity of the transaction just with the 3 paragraphs. Okay. Complexity of the transaction with just 3 paragraphs I have created over here. Okay. Now there was one agreement with ABC Incorporation with a company that they will allow a particular company to use certain IPs in lieu of, in consideration of sharing the revenue that is generated by use of that IP. Now, before that agreement, MFN already in an agreement with DEF Limited that whatever IP will be acquired by the MFN will be shared with the DEF Limited. Against DEF Limited will issue deep discount bonds to the subsidiary of MFN Limited, which will be then redeemed at a higher price, so that MFN Limited will incur a good amount of capital gain, or the discount that has been given to the MFN Limited will be directly a profit. Now, ABC Limited is asking to share the benefit derived by issuance of the deep discount bond to the MFM subsidiary in India as a part of their revenue sharing agreement, which was done in the start that we discussed in the first paragraph. but the bonds are still not yet redeemed. So how to decide the revenue? How to decide what benefit has been acquired by the MFN and whether MFN company is required to share this particular revenue with the ABC Incorporation. A lot of complex transaction. Okay. Now, again, this ended up in litigation. This ended up in litigation or case over where there are two questions. Number one, whether MFN GmbH, whether MFN GmbH is required to share benefit from deep discount bonds derived by Indian subsidiary. If yes to one, then what amount is earned by MFN GmbH after taxes, which is available for revenue sharing. So if you see in the second one, calculation of the amount requires, knowledge and skill of accounting. And for that, a forensic accountant was appointed to gather the evidence about this particular whole amount. So here, forensic accounting will come into picture. That, evidence will be gathered to explain whether the transaction has happened or not, to explain, keep the evidence as a, acceptable one in the court of law to calculate the amount. Okay. See how different it is. This transaction is this with respect to the fraud. There is no element of fraud. There is only litigation. Okay. With respect to accounting. Another side of forensic accounting that we are discussing. So here the analysis is done, understanding is done, revenue, whether what revenue has been earned, what should be there after taxes. Okay, because different gaps are involved. This is just a 3 paragraph. But if you think different financial reporting frameworks, different accounting standard, IFRS, impact of that, tax laws, what is the amount available for the revenue sharing, all those things can make this particular litigation very complex, this subject matter very complex. And over there, the skills of forensic accounting come into picture. So it's not just a fraud investigation when we talk about forensic accounting. Okay. The term, if you see, the forensic means before the forum, that is, relating to used to be used in appropriate for the court of law for public discussion. And the term of forensic accounting, okay, it is kind of a study and interpretation of accounting evidence, integration of accounting, auditing, and investigating skills. Usually, majorly, it was earlier used for the fraud investigation to track and collection forensic evidence, usually investigation and prosecution of criminal acts such as embezzlement or fraud. But nowadays, it has expanded to a different level. Okay. So again, that depends upon what kind of, assignment it is. But again, it can be related to a fraud. It cannot be related to a fraud. Okay. So what is the usually objective is to provide true and fair picture in case of an audit, okay, in case of an audit, is to provide true and fair picture. Generally, it focuses on the overall books of account. Okay. An approach is the control or substantive testing of the balances. Okay. And identification of the misstatement. But when I talk about of forensic audit or forensic accounting, basically, okay, it differs. It differs with respect to the statutory audit. And how it differs, it is discovery of facts and evidence. Where I was, true and fair picture, it becomes discovery and fact and evidence. Focus is not on overall review of books of account, focus on a validity of a transaction and balances for a particular purpose. The approach is the testing to confirm suspicion or allegation. Approach is in audit, it is substantive or control testing, where here it is focus is testing to confirm suspicion and allegation. Target is identify or confirm the nature of violation or transaction, basically. Okay, or in this case, in case of audit is identification of material misstatement. Again, skills, scrutiny, analysis, fact-finding, interviews are required. Again, same test checking, analysis, inquiry, and observation in case of audit. Presumption of professional skepticism and due care is required. Whereas in forensic accounting is neutrality. You are not required to assume the fraud has occurred or the transaction has occurred. An outcome is present evidence to the court of law. And in case of audit, it's an audit report opinion. So that is a basic difference between forensic accounting and your statutory audit. Generally, how forensic accounting is done with respect to, I'll just give you some examples with respect to the forensic accounting. With respect to financial statement manipulation, fund diversion, asset tracing, anti-money laundering, license fee, dues, tax evasions, related party transactions or valuations, valuations or estimation of loss or damage, suspicious transaction under insolvency or bankruptcy. These are the areas where, forensic accounting is used. And how the forensic accounting is done is, first, you understand the whole assignment. So initializing is basically kind of, appointment. And understanding the scope and objective. Then you develop the plan. Planning basically and risk assessment, kind of, if it is required to be done. You do the testing and gather evidence. Once you gather the evidence, then you perform the analysis, okay, of the evidence. Because it's not the clear picture in forensic accounting, it is not like, black and white. Okay, we got the evidence, everything is clear, it is done. No. In forensic accounting, it is utilized when, nothing is clear. You cannot directly identify from the evidence what has happened. You need to perform thorough analysis. And analysis is the critical part in forensic accounting. Okay, you need to analyze. You do the analysis of the evidence, kind of correlation with other evidence. You need to prepare a report. Okay, whatever you have found. And then the important part is the post proceedings. Presentation of report in court of law. So whatever you report, you will prepare, by default, it will reach to the court. That is the, understanding, or that is something is assumed in every forensic accounting assignment, that the report will end up before the court of law. And the court may rely upon the report based on, how the whole investigation or forensic accounting assignment is done. So then it comes to questions on the whether to accept the report or not in the court of law. Clear? So there is a basic format for the forensic accounting report that is given, okay, which is title and addressee, scope and objective of the assignment, approach and broad work that is undertaken in the forensic accounting assignment, executive summary that is necessary. Okay, what executive summary means? A summary of whatever you have done, whatever identified, and whatever conclusion it is. Reference of any expert that is used. Fact that assignment has been conducted in accordance with FAIS. That is very important. This one, FAIS. We will look into those standards now. List of findings, assumptions any taken, and the conclusion at the end of the report. That is how the report is required to be drafted in case of forensic accounting assignment. Now coming to the part over FAIS, that is forensic accounting and investigation standards. Okay, these are the standards issued by ICAI. Okay, for the chartered accountants who are delivering forensic accounting and investigation services. So in short form, it is known as FAIS. Okay, the framework here governing the forensic accounting and investigation standards. Okay, the framework of FAIS lays down the principles and boundaries for undertaking such services. The way we have engagement and quality control standards, SAs, okay, or SRE, SAE, all these things, SRS, same way there are FAIS, forensic accounting and investigation standards. These standards are required to be followed when a chartered accountant is delivering forensic accounting or investigation services. So the standards are basically divided in three parts. One is a framework. Then there is a one part of the standard is a framework. Second part of the standard is kind of preface to the accounting standards. And third part is the standard itself. So the framework provides an overall understanding of the forensic and investigation standards and their key components. It outlines the manner in which these components together are important and read, okay, to provide the services. And third, to improve the quality of the services that is required to be provided. So that's the key role of the framework. Framework basically provides how the standards are structured, how the standards are required to be followed, what is the overall understanding of the whole forensic accounting and investigation required, what are the components of the standards, everything. So framework gives an overview about the standards. Okay. It's established the structure which governs the professional accounting and investigation services. That is a kind of a framework. Okay. Now, framework, as I told you, is basically based on basic principles of the forensic accounting and investigation standards. It provides key concepts. It provides standards, basically, details about the standard and the guidance. And then you have a code of ethics to cover that. That is the overall governing framework of the forensic accounting and investigations standards. Okay. So basically, when I talk about standards, these are the list of standards which are as of now there. Okay. That is 100 series, 200 series, 300 series. Okay. And you have 400, 500, 600 series. Now, basically, each series talks about a particular aspect. For example, 100 series talks about standard on key concept, which includes nature of engagement, fraud risk, laws and regulations, applying hypothesis. When I talk about 200 series, it talks about engagement objectives, engagement acceptance and appointment, using the work of an expert, engaging agencies, communication with the stakeholders. As 300 series talk about executing the assignments, 400 is a specialized area like applying data analytics, gathering evidence in digital domain, loans or borrowings. Okay. 500 is upon the reporting and 600 is the quality control. Now the question comes is, are these standards required to be learnt in depth as of now, whether in your syllabus? So as of now, they are not in depth in your syllabus. This is the only numbering and the name that is there. In depth, still it's not there other than the reporting part, reporting results. So the reporting results is already covered over here. This one. Forensic accounting and investigation report, 510. So the 510 is covered. Okay. That is, you are supposed to go through the report that I just now discussed. Title, address, scope, approach, executive summary. That is there. Okay. Other than that, only the list is there in your scope and the detail about the framework. That's it. The detail about the framework and the list. Okay. Other than that, you are not required to, you are not expected to go in detail of other standards. But yeah, if you want, you can read for your understanding and for your knowledge. Any doubt till now with respect to forensic accounting? Any doubt? So just a quick recap what we did today. We started with due diligence. We saw due diligence report. Then we understood the difference between due diligence and audit. Then we went to investigation. We understood various type of investigations. And we then understood the difference between investigation and audit and the level of assurance where it stands. Then we went on fraud investigation specifically. How fraud investigation, section 143.10, we understood 447 punishment, something about that. Okay. How fraud investigation is there, what is done in fraud investigation, different type of fraud investigations, category of frauds, how the evolution from the fraud triangle to the fraud diamond is there. Okay. Then we understood about the forensic accounting, how fraud investigation is a part, okay, in forensic accounting. Forensic accounting is a bigger in term. Fraud investigation is just a part of forensic accounting. Okay. We understood about the forensic accounting, what is the need, how it is different in terms in certain cases with respect to the fraud investigation. We learned something about the reporting part. Okay. Then we discussed about the the summary about forensic accounting standard framework. What is the need of the framework? What framework explains list of forensic accounting standards, forensic accounting and investigation standards. Okay. Then we discuss about something about the reporting part of forensic accounting report, how the report will end up in the court and how it will be used. We understood the whole journey, how to conduct the forensic investigation, initialization, plan development, gathering evidence, analyzing, reporting, and court proceedings. So we understood in detail about the forensic accounting assignment. Any doubt till now? Any doubt? What is required after this lecture from your side? Basically, it is required that you go and read the chapter thoroughly. See, guys, till the time you don't read, there is no exception for that. There is no exception of reading the chapter. No exception. You have to read. And if you have doubts, then yes, I'm here to resolve your doubts. But a reading is required from your side. Do we need to prepare accountants in case of forensic accounting? Accountants, as you are asking accounts or accountants? Do we need to prepare accounts? No, we are not the preparation. We do not prepare the accounts. Otherwise, it will be a conflict of interest. So it's kind of a detailed analysis in forensic accounting. You do kind of an investigation. And if you have prepared the account, then how can you do an investigation? It will be a conflict of interest. You cannot, you should not prepare the accounts. Any doubt? Any doubt? No? If no further doubts, then guys, we keep it till here. Please read the chapter. And the next lecture, I want you to bring all your doubts. Next lecture will be the last lecture for this particular batch on the audit. Okay, we will be covering our last lecture. If you have any doubts, please, I request you bring in the last lecture. I'll take up all the time and to resolve the doubts. Okay, but I want support from your side. Okay. Thank you guys. Thank you for participating in today's lecture. I'll see you in the next lecture. Thank you very much. Yes.